That long, you're part of the furniture. So we will be welcoming guests to come up in probably the second half of the AMA. So if you've got any real testing questions that you've got for either Joe or myself, then you're going to be very welcome to come up and actually post your questions directly and put Joe on the spot, which is one of my favourite. That's one of my favourite things to do every day. So.
Yeah, and he's not kidding. He sent me a form of, I don't even know how many questions they are right now. Oh, wow, 55.
55
questions.
It is just 55.
Yeah. Right.
I haven't added any more today, to be fair. I have actually thought of a few things, but yeah.
I think you should rest a little bit, take a break.
So, for those of you that don't know, obviously we're working very hard in the background, obviously looking at ways in which we can do things differently. And, of course, a lot of that involves us engaging with other projects, which we absolutely love doing. And, we get some great questions always coming in about crypto mining. I think everyone's got an innate fascination with it, but don't really know an awful lot about it. And, I think for those of us that are very comfortable in the space, it's very easy to kind of get caught up in, especially some of the lingo and buzzwords. And we automatically assume that people really understand that. So, it's a case of just, kind of digesting this stuff down into content that people can consume very easily. And I think that's something that, that we've absolutely been working on, to make it, I guess, a lot more accessible, which is something that, that's our ultimate aim, is to be, the most accessible, sustainable crypto mining project in existence that's based on an NFT, clearly. So that's work that's just been going on in the background. So really looking forward to start doing that little march. But with that in mind, actually, we've got quite a number of things to be updating you on tonight, which actually is just very, very pertinent to the existing projects. And I think that's really the purpose of today. Is going to be going into what we refer to as Cycle 4. The fourth complete cycle that we have been through since we got our own facility. I know Joe's got some exciting updates for us all. But without further ado, Joe, do you want to just give us a little bit of what the hell has been going on since we actually started the move? It'd probably be good for those that probably aren't so familiar with the project, just to kind of give them a bit of a lowdown in terms of a whistle stop of what happened, where we got to, and how we ended up at our fourth successful cycle.
Yeah, absolutely. And just want to say it's a pleasure having JT on the team. If any of you are like me, when he talks, I just don't want to interrupt ever. I'm happy he's taking the load off, and he seems that he's a person who can truly convey something so eloquently and reduce it to really the core essence of the value and deliver it in a way that just sounds like he's serenading you. So I'm super excited what JT can help with and help us accomplish. It's already been monumental, honestly. So awesome. Thanks for being here. Thanks for joining the core team. And yeah, we can get started. Thank you all for being here as well. It's really exciting to be able to share the information that we have for you. This is cycle 4, so that means that we've had 3 other cycles of full mining. Each cycle is about a month long. We've had the lowest cycle, our uptime was over 96%. And since then, cycle 2, cycle 3, about 98% and above uptime, which is incredible. I think we shouldn't be short-sighted. Things could get harder as we move into the summer. We've picked, this is a term that we've become as a team very fond of, and it's geographic economics. Where you build the facility matters a lot, and people tend to underestimate just how much it matters where you choose to be. A lot of people follow the cheapest energy, and then they realize very quickly that that's not even your biggest problem anymore. When you're sitting in Texas and you have over like 30 some days of over 90-degree weather, maybe even more, when you have over 200 sunny days, when you have cloud coverage that's less than 20% of the year, you're going to suffer. So we've been very fortunate. And to this day, I really cannot overstate how fortunate we've been. And, a lot of this has been due to hard work, a lot of good effort from the team, but also some luck. And I'll be humbly honest, it's some good luck that we got cheap energy. We also have an optimal location. And so it's made it very easy for us to keep our machines online. We foresee moving into the summer that it'll be a little bit more challenging because temperatures will get hotter. But in the area we're in, it really only gets hot for less than a month. And I'm talking hot, like over 90 degrees, not even a month. So things are looking good. Things are optimistic as we move into the fifth cycle. So let's kind of start with just the basics. I'll try to follow a very similar format to what we've posted previously in our Discord. So we'll start with what did we mine in total, and we'll put it in Bitcoin value. And it's a little bit tricky because when we put it in Bitcoin value, we're taking the current value of Bitcoin, which since cycle 3 is now up I don't know, correct me if I'm wrong, JT, I think almost 40%, right? 30 to 40%.
Hang on, mate. I think it's actually 42.
40. Keep me in check. So 42%. So we've mined at this current value of Bitcoin about 3.3 Bitcoins in this cycle. So 3.3 Bitcoins, and we're talking Enigma. We're not talking hosting. So just everything I'm reporting right now is just Enigma, not hosting. And we'll get into hosting later. I can't really disclose how much we host because this is business related to other people who are not necessarily our community holders. But in the future, in cycle 5, I will be able to disclose how much we've scaled due to the hosting arm of Enigma. So 3.3 Bitcoins, if we were to actually compare that to cycle 3, we took cycle 3's value of Bitcoin because we have a reference point. Cycle 3, we had about 3.8. And we take that, we're actually looking at about 4.4 Bitcoin. So 4.4 Bitcoin would be approximately, in terms of growth, about 1.15 Bitcoin, which if you transform that into percent growth, it's about 30%. So since cycle 3, from cycle 3 to cycle 4, Enigma's facility production has grown by about 30% in value, in USD value. So that's a very big win. That's the very first thing we're excited to share. Our projections, again, highly contingent on several variables that none of us can control. Macroeconomically, we can't control, but the microeconomics we can, and we can dig into the microeconomics right now. Let's look at what did cycle 4 look like in comparison to cycle 3 at an operational level. So when we look at our overhead in cycle 3, I'm going to use dollar values here, okay? So that we can keep track because it's going to be hard to keep going back and forth. So we paid about $6,000 in overhead for cycle 3. For cycle 4, it's up to $7,500. So really very marginal increase. We grew about 30% in production, and we grew about our underlying cost grew about 20 to 25%. So, and that cost will actually slow down because in a lot of what we do, the costs come in bursts or intervals, right? There's this concept called the economies of scale, and I know a lot of you already know this, but economies of scale is basically if you look at a business and you were to map out the growth potential of the business and map it against the cost or the risk or liabilities of that business, as you move towards, you're moving to the right on the x-axis, and as you move there, you're going in the direction of time, and in the y-axis, it's growth, and you start to see a curve upwards, kind of parabolically, and then eventually it plateaus. So you actually get sort of like a sigmoid relationship between, the growth and the returns. So you get diminishing returns at a certain point. So the economies of scale right now, we're at the very beginning of the curve, because when we say buy a transformer, let's say $60,000. $60,000 at today's operational cost is a big chunk of it. But $60,000 when we're producing $150,000 a month is a much smaller chunk, right? If you're producing 75K and we're buying a transformer for 60K, that's a huge chunk, right? And that's not exactly, this is conceptually to explain what economies of scale is. So you grow bigger basically, and you start to reap the benefits of things that sunk into your cost early on, right? That's kind of how it works. So cost will actually slow down in its effects on the overall operation over time, right? One transformer can run 4 containers. So if you actually average one transformer and you have 1 container, you have a high cost. But once you fill it up with 3 more containers, suddenly you've spread the cost. Now it's actually 25% effect. So that's how we think about operational cost. And right now, we're doing really, really well. Our operational cost is less than 10% of the total production. So compared to cycle 3, things are looking good. And we expect it to continue to get better. So you can break the cost into a fixed cost and variable costs. So when we look at the fixed cost, it's almost always energy. That doesn't mean that energy will not change or fluctuate within certain limits. We already know what those limits are, but it will. But for example, in cycle 3, the cost in Bitcoin was about 1.94. The cost right now is actually lower because Bitcoin went up. So we're looking at about 1.6. So we're keeping more of the production. That means what we actually get to keep in holding from the rewards that are being mined is a lot greater. So we are actually able to keep about 40% more this cycle than we did last cycle. And as the market recovers, and as we control our overhead better, and as the production grows, we can keep more and more of the rewards that are being mined. So all in all, if we were to kind of look at how the relative margin performance of cycle 4, we would say it's up about 30%. So it's not as big of a jump as it was in cycle 3, because we had, in cycle 3, we actually went from like a container and a half to about 3. But 30% at a higher production level is a considerable difference. So it's almost like saying, well, when you go from 50, you go from like 25 to 50, that's like 100%. But when you go from 50 to 75, that's 50%. So if we're going from a large reference point already, we're going up 30%, it's still a very considerable difference. It's bigger than the jump from cycle 2 to cycle 3. So right now, just not to get bogged down in too many numbers, we're about positive 30% in margin performance compared to our last cycle. So that's, I'll stop right here, JT. If you wanted any clarifying points, you can jump in and ask, and then we can talk about uptime, added costs, and so forth.
Sorry, I can wait. I'm just woken up now. Just joking, bud. So look, there was a particular point I just wanted to kind of drill in on there. I mean, look, a lot of us, read the news. Crypto mining has had quite a considerable rap, and I think we've seen a spate of organisations actually going out of business. What is it that's so special about Enigma that has enabled us to kind of, steady these kind of rocky waters? So what is it about what we've done that's different, and why is that a good benchmark for the future?
Yeah, so that's a great question. I think the first thing is, when we compare ourselves to those industrial/corporate mining companies, a lot of them have started a while ago, right? So they started before us. So they got into contracts that were cheaper, but didn't have certain securities, like going into natural gas. It was cheaper at the time, but there was volatility that is unpredictable. So that's one thing. The second thing is those big corporate miners, their business model is very different. They start with a lot of money and they just buy. They just buy as much as they can, and all the production is leveraged to buy more. And so they're always operating at a negative operational budget. Literally every time they make something, they set it into a new investment. They buy more machines, and so they're always reporting negative, almost negative yields, like negative operating budget. They're always reporting costs. So that's how they over leverage. That's how they grow quickly, but then they expose themselves to a lot of risk. So the first risk is the costs of natural gas can change. Like now it's low, much lower than it was a few months ago, but still a lot of people didn't survive that surge in cost. If you're in different parts of this world, it's virtually impossible to mine anyway, as you know. The second thing is their overhead is massive. We're very lean, right? We run a modular design. We can easily build satellite locations. So once we max out our energy in our current location, if we're not able to get more capacity from our supplier, we can just move, right? It can be we've learned a certain streamlined process of infrastructure and software, and we can replicate that in satellite locations. We're not stuck to one place. We don't have a headquarters. We don't have a building. We don't have 5, 6, 60 people sitting in a warehouse. We don't have 10, 20,000 machines in one place. And we don't have a bunch of liabilities, right? So we're much more lean, much more modular, and much more mobile. So when things come and cut our bottom line by 30%, we're not basically in debt. We don't have to pay things back. We don't have to liquidate. So for those big miners, I mean, if you look at their cost bases, they can mine Bitcoin profitably, probably down to 10K, 9K, maybe lower. But when you add their overhead costs, their actual cost to mine a Bitcoin, once you factor in the labor, once you factor in the security, once you factor in the interest payments and debt and all of that, they're probably looking at a 20K cost per mined Bitcoin when everything is factored in. So that's what makes them a lot more vulnerable to these fluctuations in energy fluctuations in the market. They can only withstand that cost for so long. For us, once Bitcoin dropped to 13, 14K, we were still mining it profitably. We don't have 30 employees, so we just didn't run into that same issue. So I think that's one thing. We've also been very good, or I'd say very cautious with what we do with what we mine. There's no lavish spending. There's no unnecessary budgeting. Everything is immediately allocated to the cost. So if we mined, say, 5 Bitcoins, we're going to sell exactly in that moment of time how much we need to cover the cost, and then to cover the rent, the lease, then to cover the labor, and then what's left we'll hold. So we're not taking risks. But a lot of other mining companies, actually what they do is they just hold on to it, and they're taking loans. They're using loans to operate the company, and they're holding the accumulated crypto. So that's how they're overexposed.
Understood. And as I said, we've actually seen, haven't we, a number of projects that have actually gone bankrupt as a result. I think what's quite pleasing, and I guess, I'm kind of leading you into this, but I think there was one particular entity that provided some benefit for our existing holders, wasn't it, over the last couple of months? Maybe you want to mention a little bit about what happened there and how that presented a buying opportunity.
Sorry, I missed that first part. What can you repeat?
I said a lot. We've seen actually a lot of these operations go bankrupt, or they've experienced significant losses, and actually that presented an opportunity, didn't it, to Enigma and something that we were able to do for our holders. So maybe you want to talk a little bit about that, because none of us know the detail. We just saw an announcement, and I think you got pounced on, but I don't think any of us really know the detail behind that. So it'll be good to know and understand that.
Yeah. So I mean, behind the scenes, you know most of what's going on, and so your question, I'm not entirely sure what it's pointing to. So do you want to be more specific? Because right now, I feel like we can create some enemies if I answer this the wrong way.
All right. So what were we able to do for our holders? We suddenly were able to acquire some stock. Were we not?
Oh yeah. Okay. Sorry. When you said project, I was thinking Web3. but yes, so there are a few companies, and it takes a very quick Google search for you to find out which ones, but a lot that have defaulted on loans, because of what I basically explained, the way that they operate these business models. It's literally like you're collateralizing collaterals that are crypto. Like it's kind of like DeFi. What happened with DeFi? None of it was stable. There was no real foundation to it, and so a lot of these companies were not stable. The foundation was hopium that it's just going to keep going up. And it's crazy that you'd think banks would put hundreds of millions into things like this, but I mean, then we've seen what happened with these DeFi coins where banks put billions. So it's not far fetched anymore. So a lot of these companies have to sell. They basically bought tons of inventory from Bitmain, from other manufacturers, and they were never able to actually set them up because energy got too expensive, or they just didn't have the operating budget anymore. Setting up miners costs money. Like maybe on average, you're paying $50 to $60 installing a miner. 100 miners is 6K. 1,000 miners is 60K. 10,000 miners, 600K. Like it costs money, and that's only plugging it in. Shelving costs money. Maintenance costs money. Some business models require you to pay a fixed amount every month per machine. So let's say $100, which is on the lower end. $100 per machine per month. You have 1,000 machines, and you can do the math. That's expensive. So they have to sell. So they liquidate. And in order to liquidate things, get your money, pay the debt really quickly, you have to make an appealing buy. So we've had a chance recently to buy super, super cheap miners and sell them basically at cost to our holders. So if you're holding an Enigma NFT, you're probably the first to have that opportunity to buy those miners that cheap. So that's a huge plus. And that's only one thing that, there's plenty of other things that holding our NFT is going to confer. And another thing that we haven't talked about is also getting discounts on hosting, which I think is going to be a huge, huge play in the near future. And they're getting it now, but the way we want to implement that system so that other people can benefit from holders is has a lot of potential.
So, I mean, while we're on that subject, I know that we've got an agenda of stuff that we want to go through. We mentioned hosting there, and obviously we've got there's an NFT project as well, of which there's been 4 collections. How do the two projects operate? Because obviously it's an umbrella and it's a different organisation. How do they operate autonomously, and how does they interact?
So it's really, there's a simple way to think about it. You could think of it as there are two businesses, basically, two projects that are right next to each other and operating in the same facility. And the hosting is almost paying rent, right? Paying for the right to be there. And that payment is what helps scale the Enigma project. And the current rate is about 10%. So the amount of money that is made from a traditional hosting business model, which is Alteri, about 10% of that is going into buying more miners to mine more rewards for the NFT collection. It's that simple.
Super. I think, again, because we've got people in the space that aren't holders, I think it's good just to understand that the hosting side of things is very much a separate entity compared to Enigma Economy, the projects, the NFTs, etc., etc.
Correct. And it's interesting because when we first conceived the idea of Enigma, and we had a goal to scale it I believe it's like 15 to 30% month over month, which it's a very optimistic goal. It's not impossible if we were in a bull market, but it's optimistic. It relied heavily on the market. So Bitcoin and Doge and Litecoin have to do really well month over month for us to continue to recruit more and more miners in the reinvestment period. But it occurred to us that if we created a new stream of scaling revenue, then we can dissociate somewhat from the market because we're entering the space at different cost bases. So if Enigma's miners in total are cost about 2.5 million 6 months ago, right? Today it's completely different. They don't cost 2.5. They probably cost about 1.5, right? But when we have a hosting business, you're entering at today's prices, and so the revenue generated is going to actually bring down the cost basis of the revenue generated from machines bought a year ago. So then you open up this potential where you have this rolling basis of scaling that are being produced. Each stream of scaling is being produced at a different cost basis. So it doesn't matter what the market is doing. Every time we add a new client, that's another stream of revenue, and that's going to be relative to the cost basis that we signed that client up. So essentially, it makes a lot more sense to be hosting on a rolling basis continuously, irrespective of what the market is doing, and taking 10% of that is almost better than 100% of what Enigma is producing, because that 100% could be less than 10% very easily, depending on how the market's doing. So when it occurred to us running the numbers that if we just scale in another way, we can meet our goals relatively quickly and exceed them, we're like, we should put a lot of energy into doing this. And that's what we've been doing. And the hosting's been extremely successful so far. We can talk more about it later in this space. But then you're entering a business, you're entering a space that has a much, much higher ceiling, right? That has a lot more potential than what Web3 currently has. Unfortunately, that's the case. When you go to crypto mining, it's way bigger outside Web3 than it is in Web3.
Gotcha. I think that's possibly the most common question that we get when people join the Discord, isn't it? It's like the question is always around projections and how much does an NFT make, and I think the realization that a project has voted consciously for reinvestment, and I think when those individuals who come in actually understand why, actually makes them more bullish and more inclined to pick an NFT up, because there's this heightened sense of risk and reward, and they see a project actually making the tough decisions during a bear market and actually making this investment. I mean, we're probably at a point at the moment. Would it be fair to say that that miners are at an all-time low? We may not see these prices again for quite some time.
Oh yeah, 100%. I mean, the ones we just bought, they're already up 20%. If we wanted to go back and buy them, they would be 20% more expensive. We've gotten an email this morning talking to our supplier because we saw everybody starts to get greedy when things start to recover. Not to say that we're on a path to definite recovery, but already just a week of an upswing and all the machines are 20% more expensive. And if it stays at this level, if Bitcoin stays at 23K, doesn't even move up, but just stays there for another week, we're probably going to see the machines go up again. So it's a very opportunistic space. As soon as these suppliers, manufacturers see that we have a new stable high on Bitcoin, they're going to go up on price because they know people are going to pay more. Once it drops, like you could buy it today for say $2,000 for a 100 terahash. Tomorrow it could be $1,800 if Bitcoin drops like 10%. But when we were selling them, we were selling, I believe, the 100 maybe right under 1,900, somewhere around there, or the 92 to like around there, and now they're like 23 something. You can get them cheaper, but you always have to compromise something. If you're trying to get it cheaper, you're either getting it used, you're getting it without a warranty, so it was never used, but it was bought like over a year ago, or you're just buying from an unreliable supplier, and that's, you're taking a risk on that sale, so they're going to sell it to you cheaper. But it's also very risky to buy these machines online because there's a lot of pop-up scam websites. And if you found it's, a lot of people would send me these links in Discord and tell me, hey, I found it for this much. Like, this is cheaper than what you guys are selling it. Then the reality is, if you try to buy it from these websites, you're either not going to get it for months, maybe longer, or you're just not going to get what you actually paid for. And that's unfortunately what happens a lot.
Yeah, because I really fancy a 3D printed ant miner. Thank you very much. So she's got fresh air on the inside, but it looks the part on the outside.
No, I mean, like, we buy from reliable suppliers, and even then, you actually have to calculate into your cost that there's going to be 1 to 3% that are going to be somehow malfunctioning. Even when you buy it directly from Bitmain, it's good. That's why there's warranties. I mean, these machines, you can only inspect them so much. You don't know what happens in the process of handling them and then shipping them and then handling them again and then setting them up. Like, something will happen. And that's why, and that's another thing that's really good about not being an individual miner where you're buying your own machines and working with them yourself, is that you kind of dilute the risk. When you work with a facility, when you work with us, for example, we actually have a reserve of hash rate that will cover your downtime up to a certain extent. So our uptime, like, we haven't gotten to talk about uptime, but our uptime was about 98.5% this cycle. For hosting, our uptime was, because we have a lot more machines that we're hosting, our uptime is like 99%, right? But when you look at, well, which machines were down, there was maybe one person who owns 2 machines, right? And one of those machines went down. So this guy's uptime is theoretically 50%. But because we actually run a small backup pool for our hosting, then that person actually still ends up with like an 85% uptime. And that's something that you could never do if you're mining at home.
Yeah, I can remember when I was starting to put together, our core material, our pitch deck for talking to other projects. And, I kind of sat there and thought about how difficult it is, certainly the country I live in. I mean, not to mention, the fast that's Brexit, but the fact that our energy prices, you think you guys have got it expensive across the pond. Like, it's criminally expensive here, the energy prices. I think at home I pay probably close to 40 cents per kilowatt hour. My brother's business, because I asked him, he pays close to just over 20 cents per kilowatt hour. I could have an entire data center full of kit and it still wouldn't be profitable. It's, the exposure to crypto mining here in the UK is non-existent. So, and for those that can gain access to it in foreign countries, are often these institutional investors. So, for what is there for somebody like me? How can I gain, exposure in my financial portfolio? And the answer is that there isn't a lot out there. Enigma is a rarity, and there's just not that many projects that that have this approach around an NFT which represents a pool of miners. And I'm personally thankful that I discovered the project, because I think that there's a lot of people out there that have absolutely no idea that this exists. But I think people are slowly starting to wake up to the fact that, if they've got a sum of money and they want to put it away for a rainy day, then, this is potentially a very lucrative investment that's going to pay back, in rewards over a long period of time. And this is something that I think I don't feel as maybe it's my responsibility as such, but it's to give people awareness that it's not just about going out there getting whitelists and trying to flip, because those projects are harder and harder to find. But when you get that profit, where do you invest it? Is there somewhere sensible I can put it, where I'm thinking to myself, this is a good strong team, the numbers just make sense. There's there's these potential rewards in future, not financial advice, but a project that's already up and running, that has got the fundamentals in place, has got a stellar energy agreement, the potential for expansion. I was doing the maths on the land. You gave me the land size, Commander, on what we have, and I calculated it to be over 11 NFL football pitches, all lined up together.
Yes.
So that's a significant chunk of land, a great power agreement in place with your supplier, not naming names. But the expansion is there, and I think that's something that's actually pricked up the ears of some other projects. Now, I know you can't talk about those partners' names, but certainly there has been some progress in that area. So I don't know if you wanted to talk a little around that without actually, obviously, announcing anything, because clearly we're not in a position to do that yet.
Yeah. I mean, honestly, I'll defer a lot of the details, just, out of goodwill. I mean, I think most people already know that we're talking to BMC, already know that we've talked to Steady Stack as well. So the details of these partnerships are different. They're not the same. And I would just say, the best thing to do is just defer this to when we're both ready to talk about it and come out together to talk about it if we get to that point. I think that'll be cleaner. The message will be clearer. And I think that's probably the best thing to do. But I will say it's all positive, and it's all optimistic. Steady Stack, I think I think they tweeted something about Enigma recently. So they've definitely shown interest in making it more public. They have already declared interest publicly in crypto mining as a extra stream of value to their project, their holders. Exactly how it's going to be modeled, I don't know. But I know Zan. We talk on a weekly basis. Great guy, a lot of great ideas, and I'm sure that it's only going to add value to Enigma and to Steady Stack. In terms of, sorry, what was the second part of your question? I think I covered it.
I think you did cover it. But I was also, again, my understanding is that also we've had reach out for partnerships and we've actually turned them away. I mean, what's the rationale behind that?
So ultimately, there are two ways that we directly increase the value of Enigma. The first way is we're scaling the in-house operation, so Enigma's miners are growing, and then indirectly by our hosting. And so what I believe you're referring to is we've had some clients outside Web3 who have come to us with, and this is not an exaggeration, with over 1,000 miners. Now, we can host 1,000 miners, but we would be giving up a considerable amount of space and energy capacity. 1,000 miners is equivalent to about 8 containers. Give or take. It depends on the container, honestly. Like a 40-foot container would fit 300. So our first container is it's a 40-foot container, so it's about 350 miners. So really, you could fit them in 4 40-foot containers. But anyways, a lot of those Web2 clients will come, and because they have 1,000 miners, they think they have leverage, right? Like, oh, we're going to give you 1,000 miners. That's going to guarantee you X amount of operating cash flow. So, they want to leverage the negotiation. They want to pay cents on the dollar. Like, hey, we know that you're paying close to 5 or below. Can we pay 6 cents? So if you do the math on that, it's not as ideal as the models we're running right now, where we're taking a % of profit, the bottom line. That works perfectly for retail miners because that means they will never get stuck having to pay costs in a negative yield cycle. So if Bitcoin's not profitable, they're not losing money, right? The big corporations, the Web2 clients with hundreds, thousands of miners, they don't care about that. They have money to cover negative yield cycles. All they care about is maximizing their bottom line. So they will prey on the host. And so we've turned away I'd say maybe 7 clients right now, cumulatively over 2,000 miners. We've only accepted one, and that's because we managed actually to negotiate a very lucrative contract for us and indirectly for Enigma, right? Because of the 10% scaling yield. And they're bringing in about 255 miners. So it's going to be interesting because they'll be our first large client. Most clients that we have right now are between like anywhere from 1 miner to like 30, but 255 is going to be some serious numbers to work with and some serious operating cash. So it's going to be exciting. It's going to really kickstart our growth, and only because of the terms of that contract. The others, they were not good. We would rather have empty space than 1,000 miners.
Love it. Love that. But it's good that with the projects coming in, that there is proper due diligence being done. If it's not in the best interest of the project, then clearly we should be asking them to to look elsewhere.
Exactly. There's no rush. We're not rushing to go anywhere. Like, this is us being as deliberate as possible. And I remember telling you all in, I think, not January, it was like November last year, maybe like 3 AMAs ago, that our goal is like 6 containers by Q2 or something around there. And we're going to be at 6 containers in 3-4 weeks. So we're ahead of the curve, and that's by us being super selective. We have some Web3 projects that want to get you mining utility for their NFTs, but usually those conversations go something like this. Hey, I want to mint this project, and it's going to be a bunch of cute little monkeys, and I would really love it if we can set up a liquidity pool for them so that the DAO can make $50,000 a month. I'm like, bro, do you even understand the process of creating a liquidity pool? Do you understand how much infrastructural costs will go into generating 50K a month in profit? Like, and then I'm like, so what are you guys planning on minting, and how are you going to allocate your budget? And they're like, we want to mint 10,000 at 0.06, and 90% of that's going to go to marketing, and it's going to go to working with all of our blah, blah, blah. And I'm like, okay, yeah. So we've had at least like 5 of those. 2 of them were different blockchains entirely. So if that's what you're talking about, we've said no to every single one of them.
So I'm going to double down on one of those points there, because I think many of us are quite curious around, I know you hate projections, but I'm going to do this to you anyway. So if I was as an example, I was interested in kind of, let's just pick an arbitrary figure, like $5,000 per month. How much investment would I require in something, in alternatives to kind of generate that? What's your estimation? I mean, let's just take, I don't know, real estate. How much in America? Because I don't know the American market well. How much would I need? How much investment would I need?
Yeah. Okay. So no, I actually love that question, and it's definitely it's always good to have a reference point so that you know what is the opportunity cost of the action or decision you're going to make. So now we're talking aside of Enigma, we're just talking in general the opportunity that is crypto mining. So if you wanted to create like 5,000, this is how I hook investors into the space, like from outside Web3, and it's worked super effectively. If you want to create about $5,000 in passive income per month, okay, what does that look like in terms of how much capital you need if you were going into real estate? Generally speaking, in real estate, to make that much, depending on the market, so where you are, and you've already specified that. So if you're like in America, you're probably looking between $1.5 to $2 million. That's how much money you're going to need to invest into a rental property to make $5K a month. Now, if you wanted to look at alternatives like, you want high, like these savings account with high yields, you're probably looking at about 3 million. If you're looking at bonds or dividends, you're probably looking also in the realm of $3 million. But if you're looking at crypto mining, and I know there are obvious pushbacks to this argument, but if you're looking at crypto mining, you need anywhere between 80,000 to 150K. And it depends on what you're mining, of course. It depends on what you're mining, what the machine is. So, I mean, you're saying put in 80 to 150K to make 5K a month in crypto mining versus put in 1.5 to 3 million to make 5K a month. The obvious rebuttal is, well, the underlying asset value. That's true, right? But I mean, this space has been validated by over a decade of business. I mean, crypto mining, multi-billion dollar industry, and people have been doing it for over a decade. So maybe 10 years ago, that's a legitimate concern, but today it's really not. So the people who go like, hey, but that's crypto, it's risky, like you don't know. Well, no, we kind of have over 10 years of data points. And actually people who started 10 years ago are now enjoying their private jets and looking down on your one property that you spent 60 years of your life saving up for to make 5K a month. So it's definitely a very interesting, very appealing opportunity when you put it in the scope of the alternatives.
I look forward to flying the company jet over to come see the site, Joe. So it's all good, mate. But
Yeah.
talking of that, obviously a lot as you know, we did actually have some questions that came through the Discord over the last couple of days, and I think one of the questions that's been highlighted was around security. I think the first element of that was around security of the site. You know, how is the site secured? You know, if the locals cotton onto it, you know, are they going to get cross and turn up with their pitchforks? But also the security of the machines themselves and the wallets. So maybe you want to kind of just give us a little bit of an overview regards to security to those three topics.
Yeah, so I mean, the first thing is, you know, you just have to exercise common sense. So a lot of times people will ask for things like, give me the link to your pools, and you know, you can reverse engineer links to a pool to paid out wallets to like, if you really tried, you can. So like practicing common sense where you only share the information necessary for that specific entity, that is like step number one. Number two, you know, in the beginning, we were a little bit cautious with our location, but most people know where we are now, and that's fine because we actually have security on site. We have security cameras with real-time footage and real-time dispatch to cops and the nearest police station, which is like less than 30 minutes away, or like 35. I know I'm giving people like ideas now, like, oh, we have 30 minutes to pull a heist. But you got Keith, who's very close, and Keith has a very long pitchfork. I would not fuck with him. So our dispatch time to the actual location is less than 20 minutes. We have alarms that will go off if you get too close. And when the alarm goes off, the cops show up. We have barbed wire fences, all of which will be upgraded in the near future once it's more feasible. But it's really not necessary because right across the street, we have another big corporate miner. So at the end of the day, it's like no one really even gets ideas to do anything. We're right next to the street, right in front of an energy supplier, right in front of another crypto miner. And so the physical security is I think already in place, and it's, I'd say, more than enough. In terms of like our cybersecurity, common sense, number one. Number two, we only use all the pools that we're using, everything is automated. Everything is stored on trusted, secured software. So we don't actually use like some online distributing software that is unreliable or not secured. And what we also do is when we're not distributing, which is we're distributing every 2 weeks, our actual online system is off limits. Like there's no way to, it's like an extra security measure. So we've worked with consultants who actually consulted Core Scientific and their cybersecurity system. And they've come and set everything up for us. So we don't even pretend to be experts at doing that. But there are measures that you had to take that are in place, and that's that. So in terms of like your wallet and your wallet security, well, that's all really a function of just the blockchain space. Your wallet is your own responsibility. we don't have like anybody's secret phrases or any of that. So
Well, I would hope not. But in terms of
we have yours.
yeah, well, clearly, that was part and parcel of the deal, right? But in terms of the site itself, we probably might have some trouser rubbers that do want to go and visit the site and check it out. I mean, is that something that we're offering to serious investors and projects? Are we going to be giving a tour, and to top that off, will there actually be potentially a virtual tour for us holders so that we can have a little look around? Is that something that's coming?
Yeah, 100%. So we talked about this, I think, not too long ago, where I mentioned that we're preparing for like sort of visitation rights and making it visitor friendly. So, I mean, if you had visited like 4 months ago, it's like walking into a desert that's fenced, and now it's got the gravel, it's got the actual like pavement leading up to the containers. It's a lot more aesthetic, but it's not there yet, right? We just branded one of our containers. We want to brand the other containers, and we just want to make it look more appealing before we open it up for visitation rights. And I think it's not open to everybody. It's really open to the relevant people. So either people holding Enigma NFTs and or hosting clients. So people who are hosting with us have already been there. Like the person with 255 miners isn't just sending 255 miners into the abyss. They showed up and they inspected and all of that. So some people had already had to be there as part of the negotiation. Most people haven't been there yet. I would say it would be ready maybe in 3 months, because right now until the next 3 months, we're just growing so much. We have cranes on site. We have containers being lifted, repositioned. We have transformers sites being dug because we just bought another transformer to put in so we can have 8 containers. So there's a lot of moving parts right now, and it just wouldn't be stable to have people walk in and something lights on fire and someone gets burned and then we're screwed. So we gotta find a more stable time, and I think that's in the next few months. But it's definitely on the roadmap.
Dear me, that took a bit of a darker turn that I wasn't expecting.
Well, I mean, yeah, you just ask Keith. Just ask Keith what happened to him when he was fiddling with the breaker in the 40-foot container, and Steven was there too. And I tell you, I'm telling you this: you bring it up to Steven, and you're going to just feel so much resent in the undertones of the story. That he was there in the container, and I told him that we need to make sure that these breakers work. Okay. And I don't know why he thought he needed to make sure that the breakers work, but he actually took it upon himself to try and like kind of stress test the breaker. And it just turned into a massive fireball that almost engulfed his face. And to this day, I think he has PTSD every time you bring it up. So things can happen. Things can go wrong, which is why you got to be cautious. I mean, dude, honestly, the people who do this labor, the linemen, they get paid a lot of money, and it's not because the work is so hard, it's because it's risky. So there's a lot of layers of safety, a lot of breaker systems just to make sure that things don't go south.
Yeah, it's danger money, isn't it? You certainly couldn't have someone clumsy like me on site. That really wouldn't be good. Besides,
no, but we can send it. I feel like NFT Maxi. I think he can withstand it.
I was going to say, I think, yeah, you need I think for me to come over, you at least need a little office there with a coffee machine. Maybe a bottle of
that's too much already.
A bottle of bourbon or something. If especially if Max is going to make the flight, he needs somewhere to stick his feet up.
Yeah, like what I would like actually is like a big tower so I can have a good view over everything.
That's a little too high maintenance for this site, but we'll consider it for the next one.
All right.
So in your announcement, there were a couple of other little bits in there. I'm not sure if these are things that you wanted to cover on the spaces. You mentioned something like about a discount system and some up and coming buy and host opportunities. I didn't know if there was anything there that you wanted to go into before I ask you a $10 million question. But
I don't know. I mean, I think everybody is holding their breath on another buy and host opportunity. You know, whether it's an NFT that they can buy to own their own miner or part of a miner as a a way for people to kind of it would be different than Enigma because it would be more directly linked to a miner. You would have like the ID of the miner and you'd know how much of that miner is being shared. Um, and so it's we kind of teased the idea of dropping an NFT collection where uh, you are essentially buying the machine and getting an NFT to represent it. But really, the way it will work is you just mint an NFT, and about 100% of what you put in goes into the miner. So essentially, like buying a machine, but you just can't afford the full price of it, and then getting an NFT representation of it. So I know people are kind of anticipating this, and um, this is certainly something that is in the books very soon, and we'll have a different AMA to discuss that. The other thing is we always have our email open for people who want to just buy machines directly. They can email. We always have opportunities. We're not constantly prompting, just because we're busy doing the building stuff and the setting up stuff right now on the site. But if you're interested in buying miners, you can always email us. And yeah, JT did. What was the other part?
It was around the discount system.
Okay, yeah. So this one's a little preliminary, I'd say, but we kind of talked about how we're building. So right now, if you hold an Enigma NFT, you're automatically getting a discount on hosting. So we have a lot of holders who are also just directly hosting individual miners, their personal miners with us, and their fee structure is cheaper than say like Web2 clients or any other client that's not holding an Enigma NFT. So right now we discounted most of our holders, I'd say on average of like 5%. So what we're trying to do is we're trying to make it a tier system where depending on how many NFTs you hold, you'll have a tier of discounts on hosting. And that is actually a massive quantifiable value because say, for example, you're that person, you're that client with 100 miners. You don't hold an Enigma NFT. But if you were to tell that guy that if you just bought an NFT from OpenSea, that you'll save 2% on hosting. And this guy's paying, I don't know, 30K a month on hosting. So, you do the math and, presumably they would extrapolate the cost over 6 months to 12 months. Let's say their break even point's like 16 months. Saving 2% over 16 months to break even, say their break even's now 2 months quicker. 2 months is, I don't know, $60,000 and the NFT is 0.3 ETH. Like you do the math and you're like, okay, well, why the hell wouldn't I just go buy an NFT on OpenSea? Like this Joe guy's an idiot. But in reality, that's just a way to bring value to our NFTs and to the holders. And so that's kind of what we discussed. We're right now developing the actual details of the tier system and figuring out the nuances. And once we launch it, I'm 100% certain that this is going to add a lot of value to the NFTs. And even if you're not even if you're not hosting yourself, we're figuring out a system where that discount is transferable, sellable, or rentable to people who are hosting but not holding the NFT. And so that's kind of what we're working out right now.
Well, one of the other areas that we've obviously seen some progress in is the brand new dashboard, which was long awaited by many of our holders. I think there was a collective cheer when it launched. Clearly, there's been a lot of changes in the background and some updates. I mean, are you quite happy with the progress? And maybe want to talk to that a little about some of the challenges around creating a dashboard, especially given the fact that the background with the calculations is quite complicated.
So to be honest, the actual issue with the dashboard is not that that writing the functions is complicated. We've done a lot more complicated stuff. The complication is actually the API throttle limits. So we use APIs from, say, F2 pool, or if you were to use it from Ant pool, right? You're pulling data from what's being mined and you're projecting it on a screen. It's, from an idea perspective, it's pretty simple, but there are technical limits, right? Like you can't just use another software's API an unlimited amount of times. They have limits. So there are technical limits that have actually caused difficulties in projecting real-time information. So then the question is, how do we circumvent that issue? Do we create our own technical code structures? That we could do that. But then we have to go to those softwares that are hosting the miners. They have all the data, all the hash rates, all the IDs, and we have to figure out how we can get that information from them, not through the API that they already have, because it has technical limits, and then that's going to cost money. So the reason the dashboard has been a little slow is because it's relying on an API that has technical limits. So the way we decided to deal with that is, instead of having it call the API every single second or every single minute, we're actually doing it every cycle and every payout cycle, which is once a day. So you won't see these numbers on the dashboard updating every hour, but you'll see them update every day. Now, the other part with the dashboard is, if you look at the total Bitcoin mined, that's a cumulative number. That's not per cycle. Once we exit the reinvestment period, it's going to be per cycle, because I think it makes a lot more sense for people to track what has been mined in rewards over the reinvestment period versus every cycle in the reinvestment period. And so, because it's not super, what's relevant is what happened in that whole investment phase. And then from that point on, what's relevant is what's happening every cycle, and how much is eligible for claim, right? So that's why it'll be reset every cycle after the reinvestment. So the total Bitcoin mined value, it's really not complicated. We just haven't had the time to go and fine tune the software, but that number is actually manually updated. All the other numbers are updated from the APIs, real time, and projected onto the dashboard. So what happens is, every week we'll actually take all of the real-time data, sum it up, and add the difference to the total mined in Bitcoin value. And then you'll see that number catch up. So it's not ideal. It can be solved, but as you guys are hearing from this space, we're actually really busy doing all the other stuff. And so that's kind of why it's still manually updated. But in general, I like the dashboard. I'm a pretty hard critic. Maybe it's because the whales have influenced me, but I think the dashboard still needs improvement, still needs gamification. There's still a lot more we want to do. You guys remember the stereoscope dashboard? If you guys aren't part of Enigma's community, you probably weren't there to experience it, but it was super user-friendly. It had a leaderboard, it had ranks, it was ranking your fractional hash rates, all that cool stuff. We want to import that and add it to the dashboard at some point. That's going to take time. So we're trying to get rid of all the priorities that are very time sensitive, and then we're going to go back and start upgrading the dashboard as we intended to.
Brilliant. I actually logged into it, and it actually was pretty quick for me yesterday, and I was quite chuffed actually. So it was quick response with the pictures. The data came up pretty quick. I mean, I certainly had no complaints. And I know that's not been a simple undertaking.
No, and when you rely on APIs, you're giving up control you're giving up control of speed. Like, you already know, when you deal with OpenSea APIs, it's like that. Like, Web3 code level is years behind Web 2. Like, you would expect that newest technologies has the best coding etiquette and techniques, but they don't. It's actually really poor structure, really poorly condensed code. The technical architecture is crap. So like, you're dealing with these APIs that just suck. Like, OpenSea APIs just suck. There's no one's going to debate you on that. So that's like, honestly, the blockchain is slow. Like, I think we already know that. The funny thing is, we know the blockchain was meant to scale the world's transactions in a decentralized manner, but it's slow. It's actually pretty slow. So especially Bitcoin, it's slow. So Ethereum is slow. All our NFTs are on Ethereum. It's pretty slow. So when we're calling all this on-chain data and you log on to your dashboard and you're like, oh my God, I only see 101 miners, but I have 102. It's like, well, I mean, you're lucky you even see 101. It's just going to take time, and it glitches a lot. So, honestly, the best case scenario, and once things kind of cool down, we really want to take this off chain. We want to make this a stakeless off chain system completely, because it'll be cheaper, it'll be quicker, it'll be more under our control. We talked about this 6 months ago. If you guys remember, a lot of you, when you were paying $200 to stake, I mean, I'm sorry for all of those experiences. I went through it. We minted at $220 a mint transaction. Okay, horrible days, the dark days. Okay, but back then, like shortly after that experience, people were like, "Why do we have to stake?" And yeah, I agree with you. We thought about it 6 months ago, and we're very close to having a super well-oiled, streamlined operation that will not be taking so much of our time. And we will go back and revise a lot of stuff. And this is going to be one of them.
Nice. I've certainly got confidence. As I said, I've seen significant change in it already, and I think there was certainly a little bit of grumbling at the start that it was so slow. I think that's begun to dissipate now, and I think we said it's a process, right? And it's all about priorities as well. So before we open up the floor to questions, so look, if you do have a question for Commander, myself, or Maxi, please feel free to raise your hand. We'll bring people up if you're feeling brave enough. For those chickens in our Discord, yes, feel free to use the chit chat if you've got questions to put in there. Because you're not feeling brave.
That's harsh.
I just tend to find sometimes people just don't like asking questions. It's fine.
We remember that guy that came up on our spaces a few months ago and asked us what these monkeys are for. Those were good days.
As a matter of fact, I think I'll save my question until after these guys have actually been up and asked questions, because I think they might have some quite interesting things to go with. So, right, William and Gyuzu, I'm bringing you up. So
I already know what William's going to talk about.
Good, you're prepared then.
I'm always prepared for William.
William, you've got the mic, my friend. What question have you got?
Hey guys, how's it all going? Thanks for starting on time. Appreciate
it. You're welcome.
Yeah, just a couple of questions. You actually answered most of them throughout your talk. So 30%, that's like a crazy achievement. Do you think we can keep that, or do you think that's going to slowly tail off as we grow bigger and bigger? And if so, what are you kind of expecting, say, in 6 months' time? Is it going to be more like 10% a month growth, or do you think we can achieve even higher than that?
Yeah, no, it's a great question. I think it's going to be a function early on. Like right now, I'd say we're relatively small operation. I think early on, the percent we can scale in 1 month is going to be heavily a function of the market. So the market does well, we actually get a really great scaling. Market does poorly, we get poor scaling. As we grow larger and larger, I think we're going to see the true mean of scaling over time. And I think the goal will be between 10 and 15%. And so if you do 10% conservatively per month, and this is a medium term, I think once we're large, I think a sustainable growth per month would be around 5%, right? But 10% per month over the course of 12 months is like doubling the operation size. So, I mean, I don't like to say things that don't make sense. If I said 30% per month, we can keep it up. It takes anybody 2 seconds to multiply 30 by 12 and go like, so you're telling me we're going to quadruple every year? It just doesn't make sense. Yeah. We just need to beat 20% a year, because that's that's kind of the intrinsic efficiency decay of machines. And as we approach the halving of Bitcoin, it's going to be, so like middle of 2024, it'll be worse. You need to, so like from here until 2024, half of 2024, we should triple in size, because if we don't, then we're not really going to scale as much. And we're on par to triple in size, so that's going to be fine. And then we have 4 years to grow at least 10 to 15% a month.
Yeah, I like hearing you think that long term. That's really great. I don't know if you can answer this question, but even just a rough figure would be great. Out of that 30% that we've scaled, what percentage of that is from what we've mined in the Enigma pool compared to what percentage of that is from buying host fees?
Yeah, that's a good question. So I actually don't have an exact number, but if I had to give you my intuitive answer, I think this cycle 4 was about 70% from Enigma and 30% from actual hosting.
Yeah, makes sense.
And I think moving forward, that will come down.
Yeah.
So the ratio will get lower. We would be expecting more from hosting, because hosting is growing way quicker than Enigma, right? Because to grow Enigma, you're either minting more. You're just minting more. You're minting more, or you're just reinvesting. And that's heavily a function of the market. Whereas hosting can keep growing and growing and growing, irrespective of the market.
Yeah, and obviously, I guess minting more, you're going to dilute it a little bit as well. So I think the buy and host play that you guys came up with is kind of genius, really. I guess my last question, I'll let someone else speak. On the buy and host, I would just like to say that one of your clients. I've been very impressed with it. For anyone who's been thinking about it, I got my miners shipped, up and running, and paying out in less than 2 weeks. So great job on that. I was very impressed by that. The only thing I feel we're missing is obviously the buy and host dashboard. Is there any kind of time scale on that? I know you're obviously concentrating a lot of work on other areas, but I think that's just one area that is missing.
Yeah, no, I agree with you. And we're actually working on it right now. So we have 3 different things, sort of 3 different functional groups within our team. And one is focusing on the actual operation on site. The other is focusing on the hosting aspect. That's Steven right now. Steven and actually our developer are working right now on the website for the hosting. We've decided that it might be easier to move that to a different website and keep it separate from Enigma. That way it's not confusing. And so that's what they're working on right now. In terms of timeline, I think it'll be a few weeks, to be honest, because right now we're at the stage where we're creating the accounts. So we have like a rough version of creating your account. The next thing to do is being able to plug in the APIs so that your account is attached with the IDs of the machines from the pool. That's going to need a little bit of back testing, and then we can launch it.
But yeah, I mean, and just to clarify, I would say to anyone again, like, it's not a huge concern of mine because you guys have been very open and transparent, and the whole process has been really smooth. So yeah, great job on that. It's nice getting rewards before waiting for the Genesis to pay out. So yeah, I quite liked that.
Yeah, cool. Thank you. Appreciate that.
One very last question, because now I've got you, and I always bug you on this. Any updates from Bitmain? Exactly, KA3s.
Yeah. They should be here, honestly, in the next week at some point.
Oh, that's great. That's made my day. Perfect. Yeah, appreciate that. Yeah. Thanks, guys. Let someone else speak now.
Yeah, no problem. Thank you.
No, that was a great point, because obviously our V4 collection was meant to be largely Kadena mining, and Bitmain's inability to get those KA3s has been, it's been a bit frustrating, isn't it, for everyone?
Yeah, we've been mining with KA3s, but it's been online. 100% like transparent. We pretty much rented online hash rate for KA3s. We have KDA miners, but they're not KA3s. But we've been mining with our KDA miners and KA3s, but the KA3s are an online component. But soon we'll have them actually physically there. It's a partial shipment. It looks like it's only 20% of our order. And the nice thing is the next 80% are going to be shipped in February, according to Bitmain. And we can also place more orders with that shipment.
That's great.
So, yeah, we'll see. We'll see. This will be a good test phase too. Once we get those machines, we know that a bunch of other people got those machines too. And we'll see how they've diluted the actual network, the KDA network, and how that's going to affect the price of Kadena. And it's going to be interesting. So we'll see.
Yeah,
we can make
that's the key. How many of these are they shipping in the next 2 months will be really telling. And that's why I'm keep hounding on it, because obviously that first month or two is going to be way more profitable.
I know, but it's also like, you know, like 1 or 2 months of really profitable mining is great, but, you know, things can go south in the next couple of months, and then you dilute that profit in the first 2 months, and suddenly your average profit per month is not that much better than Litecoin and Dogecoin. But who knows? We'll see. We'll see. So, like, my intuition is we're going to see Kadena's price drop maybe 20-30%.
Easily, yeah.
Yeah, and then I also think that the profitability will drop another 20-30%. So we're probably looking at a 50% cut in the profitability of the miners, but we'll see.
I'd take 50% based on what they're earning now.
I know. It's like, well, with our energy, they're actually earning $60 a day, not 50.
Yeah. Oh, that's crazy.
So look, if you're a sensible individual, you would then, with that knowledge in hand, you'd play the market and you would short KDA. So
honestly, though, yes, maybe. But then, you know, this macroeconomic force called the Feds are going to come and just say no interest rate hikes, and suddenly KDA is $10 and you're all crying.
And all of this is, of course, not financial advice.
No, never. Who would take financial advice?
Really great questions. Great questions, mate. So, Gyuzu, you were next to have the mic. So, passing over to you, my friend. What question have you got for us?
What's up, guys? What's up?
What's up?
I'm new to the Enigma economy here. Loving it. But yeah, so I'll jump straight to the questions because I see there may be other people having questions. I have 2 questions, maybe 3. We'll see how it goes. But the first question is whether, like, how much is the profitability and the scaling that you guys mentioned relying on Bitcoin versus other coins? And how would the halving affect that? So pretty much like how many halvings could we survive at this rate of growth? And is there any plan to like diversify besides Litecoin, Dogecoin, and Bitcoin, or is that the main focus for now?
Well, first of all, welcome.
Thank you.
Always happy to have critical thinkers, and I can infer from your questions that you are a critical thinker. So those are actually really good questions. Let's say that we're stagnant, we're not growing at all. A lot of people don't fully understand how the halving works, but simply the halving is when you're mining, collectively, all the miners are mining a block of Bitcoin. Say they're getting 1 Bitcoin. When a halving occurs, it's 0.5 Bitcoins. But the actual calculation of profitability is way more nuanced than that, because when a halving occurs, a lot of machines are no longer profitable, which means the total hash rate of the network actually drops. So let's like follow an example. Let's say that you're mining, the total hash of the network is like 100, and then the halving occurs, and the total hash of the network is now, let's say it's like 50. It's not going to be that dramatic, like half of all miners are going to go offline. But just to make it simple, let's say it's 50. So half all miners went offline. So now you have half the rewards and half as many miners. Suddenly the difficulty is half. So your specific profitability hasn't changed, right? But that's not how it actually works. In reality, you get a 50% cut in the reward and maybe a 20% decrease in the difficulty, maybe. It depends. And then it's very time dependent. And, you can't rely on history to predict the future. So we don't know how it's going to be, but it's nuanced. So if we were stagnant and we didn't grow at all, we could survive 2 halvings. We're not going to be as profitable after the first halving, So right now our miners mine at a profitability rate of 60%. Then they're going to be 30%. Then they're going to be 15%. So, and then you also have to take into account the intrinsic decay of the miner. If it's 20%, then, you know, you should expect that you're not going to be profitable after 2 halvings if you don't get new machines. But that's why you still have machines that are like 5 years old that are still mining. Like we just heard about that person with I don't know how many 17 terahash machine or something that hit a block and got, I don't know, 1 Bitcoin, or I forget how much he made, but yeah, so 2 halvings. So that's why our goal is to actually grow at least more than the intrinsic decay rate of the machine, so 20% per year. And we're, you know, far exceeding that. But that's our goal over like 5 to 10 years. In terms of the distribution of what our model depends on, how much does it depend on Bitcoin versus Litecoin and Dogecoin? Here's the irony. The irony is Bitcoin, I think maybe was about 40%, let's just say 50% of all our cost. When we bought machines, we put 50% of our budget into Bitcoin. And we put maybe 25% into Litecoin and Doge. You dual mine them. But Litecoin and Doge, even though 25% went towards them, they're about 70% of our profitability. So Litecoin and Doge are actually way more responsible for our scaling and our overall business model than Bitcoin is, even though Bitcoin is about half of it. So Bitcoin is half, but it's like 20% dependent on it. In terms of diversity, diversifying what we mine. So we mine Bitcoin, we mine Litecoin, Dogecoin, and we mine Cadino. We're very particular what we go into, but we're not opposed to going into other coins. We also have about 700,000 in GPUs that are not mining because of the bear market, because they were intended to mine Ethereum. But there were a lot of coins that were more profitable than Ethereum, a lot of altcoins at the time of the bull market. So there was if I remember, there was I think Ergo, Flux, there was 2 others that we're looking at. But then, the market kind of plummeted and altcoins are immediately unprofitable. They get hit the hardest. So in the future, we actually have a lot of hash power that we can allocate to mining other coins and diversifying our operation.
No, beautifully, expansive answer. So appreciate it.
Yeah, no, thank you.
Yeah, and so cool. So it sounds like not only adaptable but also open to new options as the time comes. And now the second question, it's a little bit more, I gotta feel like it is a little bit of an elephant in the room. Maybe it cannot be answered, but the question is there any sort of projection of, assuming that the staking gets done properly and the person stakes fully and from the beginning and for the entire cycle, but would to an extent, according to how things are going right now, how profitable one Enigma, let's say, I don't know, a V1 novice or something like that, whatever you want to use for an example, could potentially be in the gamification system? So I'm not going to call it earning, or else the IRS is going to come knocking at the door, but you get what I mean.
I understand your question. It's honestly, if I even could answer it, I would somehow find a very creative way to navigate that and give you an answer. But right now, it's extremely hard to predict. But here's what I'll tell you. The reference point to crypto mining break even is about, depending on who you're mining with. If you're mining on your own, you're looking at 28 months, probably 24 to 28, depending on your energy cost. If you're with a host, you're probably looking at about the same. But with us, we break even in 16 months. Now, if when we had launched Enigma, if we hadn't run into the hurdles of the price of Ethereum plummeting, directly after mint, it plummeted, it just never stopped falling from September of 2021. We minted at 4,400 and it fell from 4,400 to 37 to 32 to 28, and it just kept going down, right? We eventually sold at somewhere close to 3K, but we lost a considerable amount of that budget in just the amount of time it took us to even put together the operation. The budget we had has already been slashed, right? So if you look at the break even in this space and you look at 16 months, you can kind of reverse engineer what these should have been, right? Producing in eligible rewards had everything gone according to plan. But because things haven't gone according to plan, we're now having to find creative ways to compensate. One thing that wasn't part of the equation in the beginning was hosting. Now that we're hosting, we're actually opening up an entirely new revenue stream that is even way bigger than Enigma could have done on its own. So we're finding ways to actually redeem what sort of barriers and struggles we faced originally. In terms of giving numbers, it's going to be hard. It's not even worth it for even you to think about it that way, because the Genesis NFTs, the purpose of them is to create value. So, right, they can all generate, they can become eligible for rewards that you can claim, and all of that is proportional to your stake tier and number and time that have been staked. But that's not the only thing, right? There are those discounts we're talking about that will have an intrinsic value that's measurable. Then there's also the floor price of the NFT itself that, if anyone who minted at 0.07, many people exited above 0.5, right? So it's almost like if you had your own machine, your machine will generate an X amount per day, right? But you can't easily sell that machine. There's no floor price on that machine. There's logistical barriers and challenges. But if you have an NFT that represents a machine and you're eligible for an X amount of rewards that you can claim in a gamified way per day at some point, but you can also trade it for a floor price, then you've hedged. It's effectively hedged against the market, hedged against your own position, because you can just sell the NFT. And that NFT isn't tied to what it's generating from the machine, right? The NFT is also tied to the brand, it's tied to the community, it's tied to all the other things that the brand is doing. And for us, we're doing hosting, we're doing discount tiering. We have ICOs on the horizon that actually make sense. So there's a lot to come, and it's very hard to really appraise the value. And we kind of discourage thinking about it that way.
Okay, got it. So, in short, I shouldn't quit my job yet. Okay, got it.
Yeah, don't be like our co-founder. Okay, he quit his job.
Man, I've been there, done that, quit my job, went full dip dive 3 years into my own company. Right now, I realize you kind of need a little bit of both. Old world and new world until the new world takes over. And then the last question, it's a little bit short, and you kind of answered it before, but I just want to, I don't think I understand. But when I asked on the group chat what the reason for Kadena being the V4 center, I was told that pretty much it's like very profitable right now mining Kadena. My question was, and apparently they have a pretty cool blockchain system set up. Now, if Kadena is to not be profitable anymore and the blockchain system doesn't really take over and it kind of goes in the second, goes in the background, or it doesn't do what? Okay, let me rephrase. Why Kadena right now? If Kadena wasn't just profitable from a mining standpoint, would there be a reason to mine it? Or if Kadena, it doesn't turn out to be what we're expecting, is there another purpose for V4?
Yeah, great question. So there are, depending on what you read in the Discord, there may have been some outdated information. But originally, just so that we can kind of give context, V1, V2, and V3 were all considered part of the same mining pool, right? So they're considered, V1, V2 were considered like the Genesis. V3 was then inherited into the Genesis label because there had to be a lot of restructuring and rebudgeting that had to be done that affected V3, which made sense then to have V3 considered Genesis and have to reap the benefits of everything that's been built with V3's budget as well. And then effectively, because this has been a somewhat extended bear market, V4 was the first altcoin scaling collection, which meant that it was supposed to focus mainly on just mining altcoins. The altcoins it was focused on was Litecoin, Dogecoin, and Kadena. So when we minted V4, Litecoin, Dogecoin were a massive hit because Papa Elon decided that he wants to make Dogecoin the people's coin. And, there's all these rumors that Dogecoin might be integrated into Twitter and some more recent news about that, but we'll just put that aside and not rely on that. But I know a lot of people who came into V4 were thinking, all right, if Litecoin hits $1, I can quit my job. So, but Kadena was part of that altcoin as well. But then it also faced a lot of budgeting issues. We ran into more hurdles. And so we had to rebudget, restructure. And it's effectively, V4 had to, in a way, kind of help V1 to 3 in its actual restructuring and rebudgeting. So what we essentially did is we said it's only fair that V4 will get a hedge from the original mining pool. So V4 is not actually just altcoins anymore, and V1 to 3 are not only altcoins, but we're going to rebalance the pool. And we haven't actually struck a balance yet. Because we've only had 4 months of mining, we don't exactly know what's going to be the fairest, most just balance of spreading the risk and spreading the reward over the two different pools. The OG pool, which is V1 to 3, and the altcoin pool, which is V4. But what we do know is now we're going to actually scale V4 as well. So originally V1 to 3 were going to be the only ones that will scale from subsequent collections, efforts, hosting, etc. But now we've also brought in V4, and V4 is also going to act like a mini OG or a mini Genesis collection. And so if you had to think about it, effectively, V1 and V2 scale, or they're more Genesis trait than V3, and V3 more so than V4. But effectively, they all follow a very similar model. And the only thing that needs to be figured out is how are we going to rebalance so that V1 to 3 isn't more affected than V4, and V4 isn't more affected than V1 to 3. So it's just like a just system. And that's going to take a little bit more data to figure it out.
Okay, cool. All right, so it's just like one of the ingredients right now, and we still don't know what pie to make. Okay, got it.
Yeah.
All right,
exactly.
Awesome. That was it. Thank you for the answers.
Yeah, no problem. Thanks for the good questions.
These are great questions, and continue to vibe in the Discord. We have literally a team of people in there like the encyclopedia of crypto mining. So, yeah, feel free to get busy in the Discord. So, Flash, you were brought up as well, my friend. I'm going to hand the mic over to you. What have you got for us?
Hey, everybody. It's actually my first time talking. I've been a holder since, winter 21, and yeah, I'm just here for the ride. We'll see what happens. My only question is, I just had this concern last time. What is there a plan B, or what would be the options if for any reason the US government decides to make crypto mining illegal, or your local community decides that it's not allowed anymore? I don't know, like you're gonna get into some problems on that way. Is there a plan B for that?
Boo, party pooper.
Sorry.
No, you're good.
I was thinking everybody's always so optimistic. It's like, what if it goes down south in a big way? Not the crypto market crashing, not just the facility burning down, which is covered by insurance, but like really Biden stepping in front of the mic, talking his nonsense, but then he says like, we'll ban crypto mining. What, like they did it in China. So you never know. The US is not too far from China. Sorry, guys. But yeah.
That's funny. What a character. Yeah, that's. The first assumption is there's nothing south of south. So I feel like we're south, and I don't know if there's anything more southern than this. But yes, sure, these are possibilities. So the way that we've kind of navigated that question, because it's come up before, albeit sort of different scenarios. Like actually, someone literally had said, I don't remember if that was the exact analogy, but said something like, what if a herd of birds or something took an unprecedented level of shit on your container and eroded through your container? And I don't know, it was some crazy and here's a client who wants to put machines in our containers, and Steve and I are like sitting on that call, and we're like, I'm texting Steven. I'm like, I would like to take an unprecedented amount of shit on this guy right now. Let's just get off this call. but you got to think worst case, and I do agree that's probably the worst case scenario. And so we have taken some proactive measures to at least ensure that if there were ever going to be blanket policies that are going to effectively shut down an operation, you have to think a little more rationally about that. This is a multi-billion dollar, maybe, closing, it used to be $1 trillion industry. We already know that politicians are heavily incentivized in the space. So there are way too many interests, right, for something like this to just disappear, right? There were much more vulnerable times years ago where it could have been shut down, right? But the fact that it hasn't been shut down yet is really a testament to the fact that there are too many aligned interests. The technology is provably, evidentially better. And so it's not really going to go anywhere. It's one of those things that the market has sort of validated its existence. It's not going to go. But you bring up a good point when you say, someone like Biden or some politicians who've already made efforts to try and ban it, like in New York, will try to ban it. But they always have to have an argument. It has to be a sound argument. And the argument that's been coming up a lot is energy, right? This is not good for the environment, right? Right now we have a super left-leaning type of agenda that's running the country. So it's a very fair concern. We fortunately don't burn fossil fuels, any more than a renewable system would. But that's the very first thing. So one of the things that we actually highly anticipate is crypto mining will be banned if it's using fossil fuels at some point, or heavily taxed to the extent that it actually completely eradicates the margin, the profit margin. So, but we don't have to worry about that, right? It's sort of like when you look at how Tesla survived. Tesla didn't survive because it sold many cars. Tesla survived because it sold tax credits on fossil fuel production. We're kind of in a similar situation where we're small and we're actually surviving because we're using renewable energies. And in the days when they're going to come and implement all of these, intentionally prohibitive policies to ban crypto mining and make it an infeasible business model, we won't be affected because we're renewable. We're already setting it up in a way that it's going to be immune to what we expect are going to be the arguments that ban it. So that's one thing. Another thing is, we have all the operational, the LLCs, the company, the structure to cooperate with regulation. So if something were to come up, we can say, well, from the very beginning, we've incorporated an LLC. This is where our mined rewards go. This is where our machines' assets are owned. You can do all the, auditing you want, whatever. I mean, it's really only people who are unwilling to work with regulation that are going to be affected. And the people who didn't think far in advance, that made horrible decisions in the time running up to that point, that are going to be affected. And we think, fortunately, we've been deliberate from the beginning.
Cool. Thanks a lot for the answer, and that shines light on everything. I don't think they would ever ban crypto mining just because of the same points as you mentioned. But yeah, I mean, in this world, you never know. You got to be prepared for everything. So yeah, thanks a lot, man. Thanks.
Yeah, thank you.
Nice one, Flash. Thanks for coming up, buddy. Good to hear your voice finally. I would just add to that. It was actually quite surprising to see yesterday the news that hit the street around China actually looking at taxing crypto, which is definitely a softening stance compared to where we've been before, where China announced they're banning cryptocurrency again and the market takes a wallop. So definitely a positive there, I think.
Yeah. And I think we're seeing a lot of news that is more welcoming of crypto as an asset. And they've already slated policies for the future that accept crypto and treat crypto like a new asset that's honestly respected. And so I do think that just peering into sort of what's slated for the future kind of gives us an idea of actually where we're heading. And it looks actually pretty optimistic.
100% bullish, definitely, for sure. How Darryl Rolls, you have the mic, my friend, and I love the PFP.
Oh, thank you very much. I've been around this project for a while, and I want to congratulate you guys on always being well prepared. To make sure you guys are absolutely prepared, I have theorized a scenario where we are attacked by aliens. The aliens look and possibly are created by bananas that are cloned to be alive. Do you think that we would be able to release monkey minion miners to defend us against such a scenario?
Oh my God, dude. Yeah, we've all missed you too, man. It's been a while. I think last time, I remember the first time we talked, and I also remember the last time we talked. It's always a pleasure when you're up here. But yeah, I mean, if you want a serious answer, we've already drawn up an actual a strategy to fend off these angry bananas, alien bananas, and we do have some monkey minion miners, as you so suspiciously insinuate.
It's almost like I knew the future.
It's almost like you've seen things you shouldn't have seen. But
I've been sworn to secrecy. I was supposed to just hint. I guess I made it a little too obvious.
It's totally cool. I think people have sort of shared some pictures around.
I do have a more serious idea.
But what you guys don't know, though, about who has kind of conspired with us to create these banana guards is actually a person that, or an artist that sort of has an indirect link with the collector that kickstarted the entire NFT craze, honestly, to put it like as bluntly as possible. Probably the most monumental collector is a collector of that artist. So it's a lot of stuff to learn still.
Well, that sounds extremely exciting.
Yeah, it is, because when we found out who he talks to on a daily basis and who collects, I mean, probably if you had to rank the three most important people in this NFT space, it's number 1, number 2, and number 3 that collect his art and talk to him.
Very interesting.
Yeah.
I might have just gotten connected with one of the co-founders of Schiller, which is Snoop Dogg's new app that he's developing for live audio and video.
Oh, Schiller. Wait, I think we know Schiller.
I know the guy.
Well,
he's a Brit. So he's working with Snoop.
Nice.
He was actually, we shared a space last week, and it is pretty damn phenomenal what those guys are up to.
I wonder if that's how I got connected to them.
I think I did put out a sneaky tweet, but you might have blinked and missed it. But yeah, I mean, he's actually quite an amusing individual as well. He's from the same part of the UK as me, so there's a lot of slang going on when the pair of us were chatting. So yeah, Schiller's definitely that's definitely something to watch, 100%. And I'm part of the space I'm quite excited about. So. What I'll do on behalf of the project is I'll reach out to the Schiller team and just see if there is some if there is potentially a coming together there, because I'm very excited about what they're doing, and yeah, obviously a big advocate for Brits in the space as well.
Absolutely. I guess I had this idea. I think I mentioned it once before in the Discord. I've been thinking about, I've been working with NarsDAO, which is a part of Nouns DAO. They build a treasury and then they vote on doing things, sponsoring events, charity, all kinds of cool stuff. And I was thinking of giving them the idea to create nouns tied to Enigma miners, which would then continually refill the treasury and constantly give them something to do. Where we could vote on to spend the treasury on doing events and stuff like that. Is that something possible, or that I'm imagining that would involve a little bit of programming to like make it all like work that way, I guess.
Very easy to do. Great
Ah,
idea. It's a great idea, and it's something we kind of explored earlier. But a lot of the earlier projects in the space were more after the money, the fame, the glory. So they weren't thinking long term about how to build a sustainable project. But there have been two projects that have actually done this model with us. One's already kind of minted, and this was a few months ago, and they actually bought a bunch of Enigma NFTs to fund their own DAO. There's also very softly did something with Fat Cats where we just awarded them a lot of our NFTs, and those NFTs should accrue rewards for their DAO as well. We actually talked to Gajira at one point, but things didn't go too well after a certain point in the market where things got just really dumpy. But this is ideally something that I've been wanting to do for a while. We just recently started talking to an incubator project that is going to need a source of sustainable liquidity. But that is essentially one of the biggest value propositions of what we can do for Web3 projects. So, I would love to do something like that. It's a great idea.
I will bring it up in the next meeting I have with the NARS community, because I think they would be on board, and they've got a decent enough treasury where we can buy some miners and kind of get the ball rolling and everything.
Yeah, well, we're actually very ready to do this. Just let us know.
Sweet.
God, I love it when a plan comes together. So, I get from a question perspective, I think we're pretty much there. But I guess just before we sum up, I mean, if you were just to kind of give us, I guess, a summary of the things that you're most excited about, Commander, for the Enigma project, how would you bullet that out?
I would say I think the most exciting part is that the operation is growing really fast, and now we have started a secondary operation that is working in parallel to Enigma, that is sort of acting like a hedge to Enigma in terms of the scaling goals. And I'm very excited that we're actually growing that even faster than I expected. Honestly, almost too fast. We just bought another transformer today. We just bought another container today. And all of this is possible because we take deposits from these clients for they want to put 300 miners. Their energy cost is going to be 50, 60K a month. We take a deposit of 2 months. It's just the business model is so robust and it works so well in concert with what we're doing with Enigma. I'm excited that the costs are starting to become more predictable. The scariest thing was when you're mining crypto and it's an asset that's fluctuating so volatile all the time, if you just don't know what you're going to end up paying at the end of the month, it's so hard to plan. But now we had 4 straight months, and each month is getting cheaper because we're applying for all of these tax breaks. Like, because we're renewable, we actually get to waive a charge that added 10% to our bottom line, or took 10% from our bottom line. Now it's gone. So cycle 5 is going to be cheaper than cycle 4 in cost. So that makes me extremely excited. The predictability makes me excited. The ability for us to contain that cost and use all that leftover to scale is exciting. The scaling that's going to come from hosting, all of it's just super exciting. The new partnerships that are in the talks with other projects is also super exciting. So I just think we are literally right now at ground zero. This is just the beginning. And I mean it quite literally, because we just started doing things how we wanted to do them. We haven't gotten to the next parts yet. So it's been a long, long, long journey to get here, but we're finally here and things are, I think, just getting started. So that's kind of it. I'm not a very hype person. Unfortunately, I can't hype things up too much. But you
Do we need to hire someone?
We need a hype person. It's not me. I'm a doctor. So actually I come in and I tell you, hey, I'm sorry, it's cancer. You know, that's what I'm used to doing.
Dear me.
How about MZ? Maybe MZ.
Yeah, maybe MC.
I thought you were going to add, you know, me coming onto the leadership team on your list, but you know, there's just me. I'm just going to go and hide in the corner.
No, you are the missing piece. Okay, you're going to take all this excitement and you're going to make it comprehensible, and you're going to deliver it in a beautiful, musical way, in a poetic way.
I was going to say not musical. I don't think people need to be hearing that. So look, so we did actually have a quick we did have a question in the Discord from Pearl Arts, who asked, have we ever thought about buying equipment to generate part of our energy? You know, it's like solar panels, that sort of thing.
Yeah, we've thought about it. So there's so many interesting things that we want to visit at some point in the future when our operating budget is like predictable, and our margins are good, and we have leftover cash just sitting there. And there's so much we can do. You know, there's you know, like Heli from Llama Labs has a ton of great ideas. So many things we could explore. But you know, when you're talking specifically about those renewable forms of energy, like solar panels, specifically solar panels, they have long break-even points. Like, they're very expensive, but you won't really see the benefit of having them until maybe like 2 years. So it's not ideal. Also, it really depends where you are geographically. We have overcast 40% of the year, you know, like, so it really depends. There's like thermal containment, there's natural gas flaring. You can even take cow shit and use cow shit to run miners. We've looked into all of that. And some of them are really interesting, and we know we're going to try them at some point, but just I think too early.
Fair enough. Flash, you've got your hand raised. I'm guessing there's a question in there, so
Yeah,
fire away, buddy.
I got another question. I'm just a bit on the trip still about the cow shit being for miners, but that's another thing. No, I'm just wondering, is that gold, diamond, silver, bronze thing still happening with our miners at the end of the reinvestment period? Like
They
the
are.
added percentage they are, yeah?
Yeah, they're going to be a one-time thing, and then it's going to be consolidated into a permanent boost on the NFTs, and then we're going to move on from it because it's only served to confuse newcomers. So,
Okay, but that's gonna happen like in summer, I guess, then, right?
right, when the first cycle of claims.
All right. Perfect, thank you.
No problem.
Excellent. I'm just going to do one last check of the Discord, make sure I've not missed anything.
All right.
I think we're good. I mean, we're running up for 2 hours now, and you know what? There are still so many things that we could have spoken about that we're not going to speak about because we need to hold our tongues. You know, we don't want to release a little too much information on certain things just yet, much as though I really would love to.
Oh yeah.
But that's the reason why we're working so hard in the background. You know, this was really meant to be an operational call, and we've sat here for 2 hours, and with some great questions, great participation from the audience, and Commander, you've been on form today, mate.
Yeah. No, Okay, where is this coming from?
It's a soundboard. I mean, clearly you've not spent a lot of time on here. But,
No, I have not. No, but I appreciate it. It's fun. Okay, cool. Yeah, so I think we can conclude it here. What do you think, JT?
Yeah, I think we're done. Let people get on with their days. I need to go and collect my daughter. So, yeah, real life is always still occurring in the background. You know, this wonderful world of Discord. We need to touch grass and get ourselves away from the screen once in a while.
I agree.
But
all right.
But yep, everybody, thanks a lot for joining us this evening. We will be doing a lot more of these. I can't tell you why, but there will be a lot more of these coming up in the future. Obviously, we'll be providing our next update in a month around the fifth mining cycle. But yeah, there's a whole host of stuff that we're working on that we just can't talk about just yet. But really, really excited to get that information out to you as soon as possible. But in the meantime, you know, check us out. Jump on to the Enigma Twitter. You'll find our Discord details in there. If you've got questions, feel free to raise a ticket. But to be honest with you, our community are awesome and will be very helpful in guiding you in the right direction if you wish to make some form of acquisition. So until the next time, everybody, I'll bid you farewell. Have a nice evening, day, whatever it is, and we'll see you on the next one.
Yeah. Thank you, everybody. Thanks, JT. And if